Bitcoin is a useful savings technology and a payment technology. You can self-custody it. That's one of the key, things. That's one of the key kind of good things about it.
In the recent show of Jay Martin, investment strategist and macroeconomist, Lynn Alden has confessed that despite all the market collapses, she will stick to the cryptocurrency and Bitcoin. In the same interview, Alden has discussed the overall market health, crypto state, and what might be the future of the market in the coming days. She also have given the possibility of strict regulations for the space due to the FTX collapse. She further speaks about the prices of the Bitcoin to go down if the FTX contagion spreads. Watch her complete interview with Jay Martin and don't forget to hit the like and subscribe button.
By the capitulation, I do think you have to be a little bit careful because we don't know the full extent of this contagion yet, right? So I wouldn't say back up the truck. I would say if someone's interested in a very contrarian space, they can layer in. That might be a way to do it. Overall, I would say it's bittersweet because I focus almost exclusively on the Bitcoin ecosystem. I'm pretty skeptical of most other cryptos other than stablecoins, which we just talked about, and a lot of those are just casinos. Those exchanges are casinos, and the DeFi protocols are about leveraging and trading tokens that are 99% not going to do well over a 5-year period, if not actually a higher percentage than that, and so there is this kind of really big sort of parasitic kind of crypto casino industry built on top of what I think is actually an innovation of Bitcoin, right? So Bitcoin is a useful savings technology and a payment technology. You can self-custody it. That's one of the key, things. That's one of the key kind of good things about it is that if you don't want counterparty risk, you don't have to have counterparty risk, right? So what we just saw was basically a tremendous advertisement for counterparty risk. And initial sources I'm seeing are showing that on chain, a lot of small buyers are taking custody of Bitcoin, and there's been a surge in hardware wallet sales, right? So at least some people, I think, are getting the memo. But it is, it's obviously a challenging environment. It's bad for price in the intermediate term, and it probably will slow down institutional allocations. It'll probably reduce VC capital in the space. I generally think there was already an oversupply of VC capital to the crypto industry. I think a lot of that was malinvestment, and actually the Bitcoin-only VC ecosystem is much smaller, and I think that's a much healthier space because it's not about building. It's less about leveraging casinos and things like that, and it's more about payments utility, better wallets, liquidity providers, better infrastructure, that sort of thing. So my base case is that I think that the bubble we saw this time in crypto is probably the biggest bubble we'll see. And I keep joking that it's kind of famous last words, 4 years from now, we might get a bigger bubble. But I actually think the combination of the macro environment, right? So the end of like a 40-year cycle of lower interest rates, all the way to zero, all that COVID stimulus, basically, I think, that bubble might be the biggest one. That might be the high watermark for how big the ex Bitcoin, crypto casino part of that industry. I think it'd be pretty hard to rival the size of what it did throughout, say, 2020, 2021. But we'll see. So I think that might be. I think there's going to be more skepticism among VCs and institutions about what they invest in. I also do think there's a higher chance of regulation now coming. Kind of hidden in the week was that the SEC won a court case against the lesser known altcoin, and basically found that they were a security, that they did an ICO and other aspects of the test for what is a security, and that now strengthens the legal precedent that they could use to go after kind of the vast majority of the crypto space out there. I mean, the SEC chairman has said that most assets that trade on these exchanges are probably unregistered securities, right? So this wouldn't include Bitcoin. It probably would not include things like Litecoin and other of these kind of say proof of work coins that didn't have like an ICO. But if a token had an ICO, there's a good chance that it's basically a security, and most of them are not registered as such. Some of them are, and so I do think that there will probably be more regulation against the onshore exchanges, ironically. So this was like an offshore exchange. Well, I think it's likely that onshore exchanges are going to have to register with the SEC and potentially also the CFTC, right? Because you have a mix of assets that a handful might be commodities, Bitcoin, maybe Litecoin, and some others, and then you have majority of which are probably securities, and so they probably would have to go through some sort of registration process. Maybe it's a simplified process. I don't really know. I think it depends on how well they do it. I mean, they could, actually Michael Saylor gave a good interview on this recently. He described it as they can go in the direction of progressive regulation or regressive regulation. So regressive would basically saying, these are all unregistered securities. You have to go through the full security process. It kind of wipes out most onshore trading. Or they can do the more progressive approach, say, okay, here's this new policy. This is how you register a token. These are the disclosures you need. And this is how an exchange, registers with both the SEC and, they could have this kind of like clear path of what you're supposed to do. So I think it depends on how much buy-in they can get. I think there is some jurisdictional battling between the CFTC and the SEC on this matter about certain tokens, if they're commodities or securities or not. This also extends over into a spot Bitcoin ETF, even though Bitcoin's not a security. Gensler has the chairman of the SEC. Gensler has cited a number of times that he's concerned about the exchanges, where the price is determined, and so he basically wants them more regulated before he would allow a spot Bitcoin ETF. And so in general, I think it'll probably focus heavily on these exchanges and the ability, kind of their threshold for what they let on their platform and what the process is.